Hey everyone, welcome back to Corporate Decoder, the place where we unbox the secrets hidden in corporate filings. Today, we're diving into a document that feels a bit like a formal update on a big deal. And let me tell you, there are some interesting details trying to peek out from behind the legalese. So, what is the big story, Kimberly? Clark Corporation, the makers of Huggies and Kleenex, are giving us an update on their planned acquisition of Kenvue Inc. This is not just a minor tweak, it is a significant move, and this filing is basically telling us everything that has been going on behind the scenes, including some legal scuffles and fresh financial numbers that give us a clearer picture of what they're dealing with. Alright, let's cut to the chase with this 8K filing. It is essentially an update or a supplement to their earlier joint proxy statement. Think of it as adding new pages to an important book. Kimberly-Clark, or KC as they're called here, is the main player we're tracking. They're the ones acquiring Kenvue. This report is all about fleshing out the details of this massive merger. All of this is happening under the watchful eye of the US Securities and Exchange Commission. Or the CC, they're the watchdog, making sure companies are playing fair and transparently with investors. Back in December of 2025, KC filed a registration statement. This is a big document necessary for the issuance of new shares when a company buys another company. It got approved by the SEC a few weeks later, which is a major step. Now, mergers like this rarely happen without a hitch. We're seeing some legal action here. There is a lawsuit filed by a Kenvue shareholder in Wisconsin, alleging that the initial paperwork missed some important information. This is pretty common, unfortunately. And these lawsuits often aim to delay or try to get more money for shareholders, or to get legal fees covered. Adding to the legal drama, Therese also litigation in New Jersey. Again, the claim is about missing material information in the filings. It seems like the shareholders are saying, hey, you didn't tell us everything we needed to know to make a good decision. And it doesn't stop there. 2 more lawsuits have popped up in New York, bringing the total number of these shareholder complaints, called Kenvue complaints, to 4. The core issues remain the same: alleged missing information and a demand for corrective disclosures. But it is not just Kenvue shareholders who are suing. Kimberly-Clark's own shareholders have also filed a lawsuit, this one in Delaware. The claim here is that KC's board breached their responsibilities by not disclosing all the necessary information for KC shareholders to make an informed decision about the merger. This KC complaint is specifically asking to pause the shareholder vote on the merger until all the fiduciary duties are met. This shows the level of scrutiny and potential disruption that can come with these large transactions. So, to address these lawsuits and avoid further delay or cost, KC is voluntarily adding more information to their proxy statement. They're not admitting they did anything wrong, but they are providing extra details to try and keep things moving. In the background of the mergers section, they're adding some specific details. For instance, about how Kenvue's board formed a strategic review committee back in June of 2025. This committee was set up to efficiently look at different options for the company. They also mentioned signing a mutual non-disclosure agreement with Kenvue in August of 2025. This is standard practice to share sensitive information during due diligence. It is interesting they note it didn't have a don't ask, don't waive clause, which is a specific type of agreement that can sometimes complicate things. Kimberly-Clark also brought in outside legal counsel Gibson Dunn and Crutcher LLP to help with investigating Kenvue's product liability issues. This is important because product liability can be a huge financial risk for companies. They mention a conflict of interest situation where their main legal counsel, Kirkland, was also representing Kenvue on some product liability cases. They clarify that Kenvue was a very small part of Kirkland's overall business, just under 1% of their revenue. Now, let's switch gears to the financial advisors. JP Morgan was one of Kimberly-Clark's financial advisors. In the miscellaneous section of their opinion, they detail their past and present banking relationships with both KC and Kenvue. This is where it gets juicy. Over the 2 years before JP Morgan's opinion, they received about $24 million in fees from Kenvue and its affiliates, and around $11 million from Kimberly-Clark. They also expect to earn more fees for arranging financing for this current transaction. This high level of engagement can sometimes raise questions about potential conflicts of interest, but it is also common for large investment banks to have strong relationships with companies. Moving on to Kenvue's financial advisor, Centerview Partners, they did a selected public comparable companies analysis. This is basically looking at similar companies that are already publicly traded to get an idea of what Kenvue and KC might be worth. We see some big numbers here for enterprise value, which represents the total value of a company. For example, the Procter & Gamble company has an enterprise value of $390 billion. Then they compare these companies to Kenvue and KC. Kenvue's enterprise value is listed as $36 billion and Cease is $41 billion. The other key metric here is the implied enterprise value to estimated 2026 EBITDA. EBITDA stands for earnings before interest, taxes, depreciation, and amortization. It is a common way to measure a company's operating performance. For Kenvue, this multiple is 9.9, and for KC, it is 11.2. The median for the comparable companies is 13.6. This suggests that based on this analysis, Kenvue and KC might be valued slightly lower than their industry peers, or perhaps the market sees some specific risks or lower growth. Centerview then used these multiples to estimate values for Kenvue. Using their 2026 estimated EBITDA, they calculated an implied equity value per S-Hair range of about $18 to $21. For KC, the analysis resulted in an implied equity value per S-Hair of about $119 to $141. These ranges are crucial for understanding how the financial advisors arrived at their opinions regarding the merger's fairness. Centerview also performed a discounted cash flow analysis. This involves projecting a company's future cash flows and then discounting them back to today's value. It is a more intricate way of valuing a business. For Kenvue, they used a discount rate range of 6.75% to 8.50%, which represents their weighted average cost of capital. This is the average rate of return a company expects to pay to its investors. They applied this to projected cash flows, and after some adjustments they came up with an implied per-share equity value for Kenvue between roughly $23 and $29. For KC, using a similar discount rate range, the implied per S-Hair equity value came in much higher, between about $137 and $168. These DCF analyses provide another perspective on valuation, focusing on the company's ability to generate cash over the long term. Then there is the analyst price targets analysis. This involves looking at what Wall Street analysts are predicting for the stock prices. For Kenvue, the targets range from $15 to $24.50 per share with a median of $20. For KC, analyst targets were way up there, from $113 to $162 per S-Hair, with a median of $132. They then use these ranges to calculate an implied exchange ratio for the merger. This is how they figure out how many shares of KC stock should be given for each share of Kenvue stock. The merger agreement has an exchange ratio of 0.14625x, which falls within the range derived from analyst targets, suggesting alignment. Goldman Sachs & Company LLC was also a financial advisor, this time for Kenvue. They also did a discounted cash flow analysis. For Kenvue standalone, they estimated an illustrative present value per S-Hair from about $20.59 to $30.08. They also looked at the pro forma combined company, meaning what the merged entity might look like financially. Here, the illustrative equity value per S-Hair for Kenvue shareholders, taking into account the cash and stock they'll receive, is estimated between $25.82 and $36.36. This is a key figure as it represents the total value expected to be received by Kenvue shareholders. Goldman Sachs also did a present value of future share price analysis. This is similar to DCF but focuses on the future market value of the stock. For Kenvue standalone, they got a range of about $15.49 to $28.06 per S-Hair. Now let's peek at the actual financial projections. Under AT standalone projections, we see KC's expected performance for 2026. They project revenue of about $16.988 billion and adjusted EBITDA of $3.705 billion. It is important to note that adjusted EBITDA is a non-GAAP measure, meaning it is not calculated according to standard accounting rules. They adjust for things like restructuring expenses to give a clearer picture of ongoing operational profitability. Then there is unlevered free cash flow, which is essentially the cash a company generates from its operations before accounting for debt payments. For 2026, it is projected at $1.331 billion. These are the numbers KC management has provided to their board and financial advisors. For Kenvue's standalone projections in 2026, they're forecasting revenue of roughly $15.448 billion and an adjusted EBITDA of $3.565 billion. Again, adjusted EBITDA here is adjusted for various items, including restructuring costs and things related to their separation from Johnson & Johnson. Kenvue's projected unlevered free cash flow for 2026 is around $2.114 billion. These are the numbers Kenvue management shared with their board and financial advisors. Then we have KC management's view of Kenvue's future, called KC Management Adjusted Kenvue Projections. In 2026, they project Kenvue's revenue at about $15.329 billion and adjusted EBITDA at $3.260 billion. Notice this is a bit lower than Kenvue's own projections for EBITDA. This is where KC's perspective starts to show through. The unlevered free cash flow for Kenvue under this adjusted view is about $1.885 billion. This difference in projections between the companies is normal and highlights the negotiation and analysis that goes into a merger. And finally, Kenvue Management's view on KC's future in their Kenvue Management adjusted KC projections. For 2026, they estimate KC's revenue at around $16.988 billion, which aligns with KC's own projection. However, their adjusted EBITDA projection for KC is $3.705 billion, matching KC's, but the unlevered free cash flow is shown as $1.641 billion. It is interesting to see how these projections can vary. Now, for the important legal stuff, this report isn't an offer to sell any stock, but it is considered solicitation material for the merger. They're urging investors to read the full registration statement and the joint proxy statement carefully because they contain crucial information. They also disclose who might be considered participants in soliciting votes for the merger. This includes directors and executives of both companies, and they detail how to find more information about their stock ownership. This is all about transparency in the proxy voting process. Crucially, there is a cautionary statement regarding forward-looking statements. This is a standard disclaimer. They're telling you that the projections and statements about the future are based on current expectations, and that actual results could be very different due to various risks and uncertainties. They are not promising that these future events will happen exactly as planned. They list a lot of these risks, from potential termination of the merger agreement to unexpected costs, litigation, and even broader economic factors like inflation, currency fluctuations, and geopolitical events. This highlights that while the merger looks good on paper, there are many real-world challenges that could impact its success. Finally, they have a note about the combined and non-GAAP financial information. They're emphasizing that the projected financials for the combined company are estimates and not prepared according to strict pro forma rules. They also reiterate that GAAP measures like adjusted EBITDA have limitations and shouldn't be relied on solely. So what is my take on all this? The merger between Kimberly-Clark and Kenvue is a huge move, aiming to create a stronger consumer goods giant. The legal challenges are concerning, but unfortunately, quite common in deals of this magnitude. They seem to be addressing them by adding more transparency, which is a good sign. Financially, the projections paint a picture of continued growth, but the small differences in EBITDA and free cash flow projections between the company's own forecasts and adjusted forecasts are worth noting. This indicates that there are differing views on just how strong future performance will be, which is a key factor in any merger negotiation. The financial advisor analyses, particularly the comparable companies and DCF, provide a valuation range, and the fact that the exchange ratio falls within these ranges suggests a degree of fairness. At least from their advisors' perspectives, the biggest risk, as they themselves highlight, lies in the multitude of external factors that could derail the expected benefits. From economic downturns to unforeseen global events, the projections are built on a lot of assumptions. Overall, Kimberly-Clark is taking a bold step to acquire Kenvue, potentially unlocking significant synergies and market presence. However, investors should keep a close eye on how these legal battles play out and whether the projected financial benefits materialize amidst a volatile global landscape. The company is clearly navigating a complex path, trying to balance ambitious growth with mitigating significant risks. Alright, that is our breakdown of Kimberly-Clark's latest filing. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.